want to warn people on something is, when I was a kid, we always said, don't trust anybody over 30. In this environment, I don't trust anybody under 30. And the reason for that is all they've known is a rising market. And as you get old enough, markets go up and markets come down. And my concern is, I'm not saying it's Jim's opinion, but I think we're heading in for the roughest markets we've ever had, because Ben Bernanke, the Nobel Peace Prize winner, or Nobel Economics Prize, he raises interest rates, the biggest bubble in world history.
And there you have it from the Rich Dad, Poor Dad author, Robert Kiyosaki. And he's sitting there telling you about what could be in store for markets. The S&P, the crypto markets, the global equity markets, markets in general, they're calling for a big crash. Now, when's this going to happen? No one has a crystal ball. We'll get a little bit more from Robert at the end of this. And before we get to any of that, make sure you go ahead and check us out at Bitcoin Bros 26. We're just bringing you content every single day. So before we get started, if you like this content, go ahead and smash the like button. It really helps out the channel. Getting straight to it, we have our first update from Game of Trades. And what they're saying is smart money is doing exactly the same thing it did in 2007. What is that? What are they doing? They're accumulating right now. They're keeping cash on the sidelines. Because if you look at these peaks, every time we have this major spike up in this chart, we have a crash down. Every single time, the 2020 top, then there's a crash. 2022, then a crash. Where we currently are right now in 2023, if history's any indication of what's to happen, it may be good to have some dry powder on the sideline. But also, taking a look here, what is the smart money doing? There are similarities between 2007 and present day. It looks like we're about to roll over a cliff and fall to the bottom. Now the question is, have we already rolled over and fell through? Or are we just sort of chopping sideways before we see another leg down in the S&P? If this does occur, having some dry powder once again won't be that bad to have. Ultimately, the market is likely headed that way. The yield curve is the most inverted since the 1980s. This signal has been accurate in anticipating the rise in unemployment rate. We could be getting ready to see a major recession every single time we have this indicator, the yield curve inversion, and it comes down and wicks below this horizontal black line here. Every single time, what happens for the unemployment rate? It moves higher every time, higher, every time, higher. This is back in the late 1970s. As you see, this was one of the lowest wicks and unemployment spiked up. Well, look where we had. We just fell off a cliff for the yield curve, and the unemployment rate has not upticked yet. Are we on the cusp of a major recession? With recession comes opportunity. So once again, some dry powder on the sideline might not be a bad idea. The S&P 500 hedgers are always seen as smart money. Their job is to take the opposite side of the trade of what retail traders and smaller speculators are doing. And what smaller investors are doing? They're extremely optimistic on the market, thinking that everything's going to continue to go up and to the right. Right here has marked the top throughout 2022. Are we just about to see another leg down? So in saying all this, you have to be patient in these markets. The truth is nobody knows. So to be fully out of the market is not, a good strategy as well. Having some skin in the game is not a bad strategy. We'll show you that scenario as well, looking at the crypto markets. If you're an investor in the S&P or stocks, it does look like it is a little bit overbought. It does look like it is a big bubble that's ready to pop. Now, will that bubble pop? Will the Fed reverse the quantitative tightening and start easing again to make markets return and rip back up? Will that happen? Having some skin in the game and having some dry powder is the optimal entry point. Right now, these markets are very uncertain and no one truly knows. Reason saying this, look at the crypto market. Bitcoin versus the US dollar. If we look at this on the monthly, we've came down and hit our head once again. Bitcoin's wicked all the way back up and is retesting this downwards resistance, but we haven't closed yet. There's a few more days in the month of January, so we'll see where January closes, but right now it looks like it may not go any higher. We'll see where Monday's open is. Looking down below at the RSI, we see that Bitcoin, every time it's overbought, it's a time to sell. come back down to this downwards resistance, time to buy, sell, buy, sell. Look where we're at right now. We're already near the floor, near macro support. So is it a good time to be sitting on the sidelines for Bitcoin and crypto? The Bitcoin bros do not share that sentiment. So let's hear from Raoul Pal, another macroeconomist. He's saying since the 1980s, the US median household has lost 89% of its purchasing power in terms of investment in equities. This is, and we've said this plenty of times on the channel, how can a young person make any future wealth when the cards are all stacked against them? And as you see here, you see this has had an 89% decrease over the past 3 to 4 decades. When people are losing purchasing power this quickly, how can you even get a starting point? Quantitative easing and other monetary policies only makes it worse over time. The only answer is to find investments that break this trap. And what investments are those? Crypto with a $1 trillion market cap is 1/200th the size of the global equity market and offers the best opportunity that he's seen to bridge this gap. So this is why the Bitcoin bros are here, not just to educate you on these markets, but to also show you that Bitcoin right now is the king crypto until told otherwise when regulation comes out. But it's going to be the biggest opportunity over the next few decades, because as quantitative easing does continue to be had and the money printer continues to devalue the purchasing power of your dollars, you do have a hedge. And with that, let's hear back from Robert Kiyosaki, and we'll end with what his take is on the markets for 2023.
You know, the avalanche is all it needs, that last snowflake. And then what happened after 2008, you know, what they did was they kept dropping interest rates like this, but the debt went up like this. And then we had crypto invented in between that time. And the last snowflake hit, it was called Sam Bankman-Fried or something, FTX and FTT. And the reason that's important because the first part of this program was on China, and China is supply chain. So our supply chain is now disrupted big time. And as Jim says, supply chain is the economy. In other words, if you can't get aspirin, you can't get this, you can't get toilet paper, you're in serious trouble.
And there we have it from Robert Kiyosaki, and he's sitting there talking about China. Another COVID surge in China is the global supply chain's biggest fear. So for those that don't know, there has been another wave of COVID in China, causing China to shut down and make factories close, individuals quarantine, and basically there could be an upcoming shock of the supply chain in the short to mid-term. Now, this is speculative. Nobody really knows what this global supply chain impact is going to have in the Western world and also the Eastern world, and how long China will be under these constraints. But it's something to definitely be mindful of, because it's not something to ignore. So do you agree with Robert and what his take is for the market in 2023? Could there be a global shock to the supply chain that would cause prices to either increase even higher due to scarcity on goods that countries have globally? Please leave your thoughts below. The best advice from the Bitcoin bros is you have an option: diversify. Have some crypto in the event that the market does continue to increase after potentially bottoming up around the 15.6 level. But also have some dry capital, make sure you have some food, and pray for the best, but prepare for the worst.